Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is a very nice Monday. It's warmed up here in Dallas, I'm telling you. It has warmed up a lot, which is a pleasant surprise because it has been very cold here as of late. Um, Market is, it's kind of trading sideways a little bit. We're still in the heat of earnings season, and some interesting news to report. Just first, kind of want to lead off with this. And I saw this, and it was very interesting because it's sort of the end of an era. Warren Buffett is basically, I don't think he's going to step down, but at the shareholders meeting, which for the first time, I think in 50 years, it was in Los Angeles this year, he is going to name a successor, and that successor is a gentleman by the name of Greg Abel. And he has been at Berkshire, I think a very, very long time. He's right about 60 or so, and he's been sort of put forward. Of course, Charlie Munger I think he's older than Warren Buffett. Wow, it's amazing. But very interesting. As you probably know, uh, Berkshire has been buying back its own stock, and interestingly enough, they made a comment, and I think it's very appropriate, talking about their position in Apple. And they sold it when it was about, I think, 115, and he indicated that was a mistake because it seems to be firming up, and I definitely think that's true. I definitely see that we're going to have probably some nice action in Apple stock. At least I hope so, because I have 3 full positions and several covered calls. So we shall see what happens. But right now, Apple is starting to firm up. It's it was a sell off on Friday, but it looks like it's firming today, which is very nice. Wanted to show you the chart for Berkshire here, and it's of course there's two classes of stock with Berkshire Hathaway. There's the A stock and there's the B stock. Currently it's trading at 280, and actually, believe it or not, this is probably, even though it has a low relative strength, this is actually a pretty good price. They're going to be buying back their stock. I may be the only thing about this stock, of course, is there's no options on Berkshire. But I am possibly interested in in getting in with a few shares for this, because I do think that over at least for right now, I think it's going to be a very strong stock. So just kind of it's out there. It's the Berkshire BERKB. Again, there's no options on this one, so you can't do anything like covered calls or anything like that I like to do. But it's sort of the gold standard when it comes to long-term appreciation. So, instead of having even a ETF, this is sort of the original ETF, I think. But they have a lot of wholly owned subsidiaries, and it's very profitable. So, and I think that it'll continue to be that way. So, very interesting. That Warren Buffett is going to name a successor, and we'll see what happens. I don't know exactly what's going to happen with his shares. I believe that he is going to will some of them to the Bill and Melinda Gates Foundation. That's what I think is going to happen. But who knows? I mean, who knows exactly what's going to exactly what's going to happen. Very interesting, though. Very interesting. I want to show you a stock that I kind of a stock of the day, but I actually did buy this one this morning for the small portfolio. And this is a stock I've had before. I had a bull call spread on it. I did very well with this bull call spread, and I closed it. But I rebought the shares. Now I've bought the shares, but I haven't done any options on it. But it's a very interesting stock. It's the Marine Max is the name of the stock, and there's a boating boom going on. Who would have known? I mean, but people are getting sick of being inside, and so they're buying boats to go out in the lake and the ocean and that kind of thing. And this stock is just doing great. It's basically it's right below a buy point. Now I did buy it a little bit early. I'll mind you. I did buy it a little bit early. I bought it sort of on this consolidation right here at about And I think you can see the pointer here, right at about 60, and then it kind of peeked its head a little above up there, and then it pulled back. So hopefully, it's on the way. It's on the way to go. But basically, this is a handle entry. I did it a little bit early. I did it at 60.10. The entry on the handle entry is 60.97, but we're splitting hairs here. So it's got a 12 rank in terms of the industry group. This is what I look at a lot of because it's a strong industry group. This leisure group is just it's doing great. So I mean, what can you say? It's up $2.60 today, or about 4.58%, and it had very very good earnings too, by the way. So just kind of interesting thing that you might want to look at. The symbol on this one is HZO, and it's called Marine Max is the name of the stock. So very interesting, very interesting on that. Another thing I kind of want to cover real quick is that this is the put to call ratio. Well, why am I looking at this? Well, the reason is because I just want to see, are we getting, are we getting bearish, or are we still bullish? Well, according to this put to call ratio, we're still bullish because we have not basically moved above, this 1.15 level of puts to calls. Now, typically in most markets that are bullish, there will be more calls bought and sold than there will be puts. So this is an indicator, but it is moving up a little bit, but it's staying within this range. So at least for right now, based on the put and call buying and selling, it looks as if we're still in a bullish motion, which is amazing to me because the debt levels or the margin debt levels are so high. So it's been relatively weak, but according to this psychological indicator, we're still in a bullish market. So go figure. Just kind of want to show you what I'm holding long. I got stopped out. This isn't quite right. I got stopped out a path just right before the broadcast here. I just couldn't make this one work. I really like the idea of this company. But it just it broke my 7% rule, so I had to get rid of it. I'm in Floor, of course. I'm in Apple. Excuse me. Apple's up today, up about 1.39 or about 1%. Matador Resources, I'm in Matador. It's down just a tad, 2 cents, not a lot. Again, I was talking about Marine Max, and then I'm in the QQQ. Now, the majority of what I'm doing right now is spread trading, and it's kind of interesting because that allows you to sort of mitigate some of your risk on that. I have a very interesting kind of article out that you might be interested in taking a look at, everybody, and this is on Venny.com, and what this is that I did I did some research about on Beyond Meat. They're going to be announcing their earnings basically here in just a few days, and so basically this is a bear put spread. So what this does is this actually appreciates as the stock goes down, and I do think that it is going to go down because the analysts are saying that it's due for a severe correction. It was as high as $221 basically in January. Now it's about 126, and I think it's going to go even lower. So if you want to take a look at this is free, by the way. Just go to this address, https://www.venny.com/u/Dallas Trading Floor. And if you go there, you'll be able to read the article. And now this is one of the many articles that we have for our Discord users. Of course, this one's free, but we also did another one today on Moderna that is for only for our exclusive members on the Discord. So that's a kind of an interesting thing to do. This is an easy way, possibly, to pick up to double your money in about 29 days. You never know, but it has a good chance of being correct. All right. Well, thank you very much for holding. And let's take a quick look at sort of some of the questions. Let's look at NTP. This is a question from Matt Anderson. So let me see if I can switch over to that screen and get that going for everybody here. There we go. All right, there we go. All right. So let's look at NTP here. Let's see. Yeah, let's look at NTP as we speak. All right. Nantai Property Incorporated, formerly Chinese manufacturer of telecom components. Interesting. Well, boy, you know what? I don't know. I don't know much about this one. I'll be honest with you. It's a little bit of a mystery to me. It seems like I guess they were doing better with their property than they were doing with their. I guess they were doing better with their property than they were doing with their electronic components. You know, these Chinese stocks are are very, very hard to trade because a lot of times they don't have complete accounting records. So very difficult. But let's kind of take a look around to see kind of, you know, what we're seeing. It's got a nicely accelerating relative strength line. So hopefully we can find something here. It's frozen up a little bit on me here. So hopefully I'll get back my cursor here in just a second. We wait. There we go. And it's got an 88 checklist. Wow, that's interesting. Okay, well, let's look at the industry. And the industry rank, it's okay. It's a 99 out of 197. So that's not necessarily bad, but it's not stellar. It's basically a real estate development operations group. You know, I don't know how to I just don't know how to evaluate this one. The ownership, it's got 10 funds that are in it. That's not that many, but it's more than 5. That's the kind of the minimum. And it looks as if, gosh, it's just such an interesting group. Is there any options on it? No, I don't think there are. No, there are actually. Interesting. Boy, you know what? I really can't say. Now, at least let's look at the weekly chart to see, you know, sort of how it is trading over a period of time. Well, it seems to have moved to it seems to have moved basically to its top level. But let's check this chart. No, we're not quite there, but it looks as if it may break out. You know, I just don't really know about this one. Not enough information, but there's been some very strong buying. There was some very nice earnings per share that came out, up 913%. So that's pretty stellar. I'm just trying to find out more information about this chart. It's a you know, it's just kind of odd. I mean, it's odd. Well, you know, it looks as if their sales were up 999%. Their profits were up 913%. So, you know, I wouldn't buy this one personally. I wouldn't buy this one personally, but you know, it might be good. I mean, it might be good. I just don't know enough about it. So here's what I would say. Here's what I would say on this one. I think what I would do basically on this one is that I would be, you know, basically watch listing this one for now. I just would. I would watch list this one. Um, so really, that's what I really have to say. You know, I can't really speak to it because it just there's not enough information here for me. But for Nantai property, I would watch this one for now. If it moves above about 14, then I think, you know, we might have something there. But at least from what I can see right now, I think you got to be careful with this one. I just don't think there's enough information. It could be very, very good. On the other hand, it couldn't. It might not be the best. So just an interesting one all the way around. How do you feel about SOS? SOS, boy, don't let's look at SOS. SOS. And let's take a look to see SOS ADS. Okay, this is another Chinese company. Again, it's almost a penny stock. It's $4.13. It was up strongly in terms of its sales. No, it's still losing money though. Boy, you know what? I just think it does have cash flow, which is a good thing. I don't know. This one it's got a 44 checklist. I think I would avoid this one. I just it doesn't give me a good feeling. So I would avoid this one. Avoid this one for now. Some of these stocks are hard because there's not a lot of there's just not a lot of history on these stocks. And another thing is, until they change the accounting rules, the Chinese don't have to don't the Chinese stocks that are listed don't have to use generally accepted accounting principles, which makes it very difficult to figure out what's going on. Now, this has been an issue because I don't know if you're familiar, but last summer, about a year ago, there was a company on the China, that was listed on the U.S. exchanges called LK Luckin Coffee, and it was total fraud. I mean, it was a total fraud. A lot of people ended up losing a lot of money. So you got to be kind of a little bit more careful, do a little bit more due diligence with the Chinese-based companies. I'm not saying all of them are bad, but I think a lot of them have okay. Okay. A lot of people lose your license because you never answer. Well, no, that's true. Okay. So let's take a question from TikTok. All right. Let's see. Forget stocks, crypto's the way to go. Well, absolutely. I mean, people have made a lot of money in Ethereum, so you could be right on that. You could absolutely be right on that. All right. What about Dogecoin? Dogecoin, I don't know. I don't know. I haven't really covered it yet. I use the GBTC to trade Bitcoin. How do you sell a higher cost stocks? How do you sell your higher cost stock? Same stock. Oh, okay. That's a good question. That's a good question. Here's what you need to do when you're trying to sell a higher stock. You basically want to sell your higher cost stock. What you do is you change the method. You change the method of accounting from LIFO, from FIFO, first in, first out, to last in, first out, LIFO. So that's how you do it. And there's a number of ways that you can do that, but you have to go to the accounting section, and you need to change that from either average cost or first in, first out to last in, first out, and that will give you the cost. That's how you can typically sell your higher cost stock. You can't in some platforms like TD Ameritrade, you can just select the higher cost, and so you can lower your basis that way. That's a very good question. That's a very, very good question. Okay. Question on Amazon. Now, everybody, I have a spread on Amazon, but it's been pulling back as of late. So, we're going to take a look at the chart to kind of take a look to see kind of how it is trading today. I'm going to show you the daily chart first, and basically, the way it's trading, it's right below a buy zone. It's pulled back significantly, about $90. It does look like it's sort of settling. I probably should have closed my spread, but it's pulled below the 10-day moving average. So the question is, will it get support there? I think it probably will, based on this pattern, but we'll have to see. It's trading much lower today than it was before. So we're down. The earnings per share were stellar at 216 up for the quarter over quarter. So it is trading. It is trading that way. There isn't a lot of overhead supply. So let's take a look at the weekly chart. Yeah, it's sort of trading in this range. It's sort of trading in this range. I think you can see it from a low. It's a consolidation range, basically. From, let's see if I could get, from a little bit under 3,000 all the way up to about 32. So right now, it's pulled back. The volume is up. So there are a number of people taking profits right now, and this might be a distribution day. So I really can't say. Hopefully, we are still in an uptrend on Amazon, as you can see, but it has pulled back below that line. This is the uptrend that we're still in, but it has violated the 10-day line. Now, it's done this before, as you can see on this movement up. It's pulled back to the 10-day line. I suspect that towards the end of the week, we'll probably see some more movement into it. But the relative strength line is down, so hard to say exactly what the trade action is going to be. But I'm definitely a holder of this. We're trading above the 200-day line, and we're above the 21-day exponential. So I do think that it will move higher, at least in the mid to intermediate term. So that's kind of what I'm looking at for Amazon. All right, QDEL. Let's look at QDEL. QDEL. And there we go. Okay, well, goodness gracious. It's a diagnostic test company. I remember this company very well. It's I would basically earnings in 3 days. I wouldn't touch this one. We're in a downtrend on this one, and probably, if that's true, it's probably gonna continue this downtrend. You probably want to be very careful about buying a stock below the 200-day line, and we're definitely way below the 200-day line. Earnings are in 3 days. It just doesn't seem to be, it just seems to be kind of in a funk, even though last quarter the sales were up 432%, and the profits were up 1,000%. That's just amazing. But it does look like it is in a downward trend, and the relative strength is 1. So I just think you got to avoid this one right now until it reverses higher, because you just don't want to be buying anything below the 200-day line. It's just too dangerous. So that's what would be my opinion. I think you could watch list this one, but I think you got to be a little bit more careful on this one, because it's just not behaving right. This is the monthly chart. As you can see, we're definitely in a long-term, a pullback on this one. So I think you have to be very careful on this particular stock. All right, let's look at NEO. NEO has jumped. NEO had some nice earnings. I think it's still in a pullback, though. Yeah, it sure is. This is disappointing, because so many people, and I haven't really traded this one since last summer, but it is definitely pulling back, and you can see it definitely is. It looks like it's bounced off the 50-day moving average. I want to check out the daily chart, kind of to see. I've got several alerts on this one. And I'm really gonna try to wait until it moves above about the $45 level. It's currently at $39.51. Just a tough stock to trade. I do think that it made an attempt at this reversal at the 200-day line, but it looks like it's fading. So on this one, you got to be careful. I wouldn't be a buyer right now. We're going to see how it does. It's I think, did it have earnings? Let's see if it had earnings. Okay. Okay. Yeah. This is the March. Okay. Wow. Look at that. They're still losing money, but look at their sales. Their sales are up 529%. That's incredible. That's a 5-fold increase in basically 1 quarter. So I mean, it's definitely a force. I just think right now, I think it's a little too early. But I definitely keep it on your sights, because it's got a lot of funds in it. 22% funds. Now, typically a stock moves the most when it has between 22 and 60% fund ownership. Currently, it's at 22, so that's looking pretty good. It also has 824 funds in it, and that is increasing. That's been increasing. So this is definitely one we'll watch. Now, I wouldn't be an owner at this point, but I think this is definitely one to watch. And NEO actually started delivering vehicles, I believe, in Europe. So I don't think that with as good as the Volkswagen people are and everything like that, I don't think they're going to get their act together quite as fast as NEO is. So I think for a lot of the Eastern European countries, you're going to see NEO take market share. You're going to see Tesla, once they get their factory going, taking the upper end, and then I think NEO is going to take the lower end. So it's going to make it tough for a lot of the incumbent manufacturers. I still think it's a good company. I just don't think it's the right time to buy. Automotive just hasn't been performing as well. Oh, cool. This is interesting. Yeah, DraftKings is one of my faves, of course, and it was upgraded. DKNG. Now, I didn't. I haven't owned it in a while. I've been trading it. I was trading it before. I really like the stock, but the problem is, of course, on DraftKings is it is still in a downward trend, and I just don't like buying stocks in a downward trend. Now, that's not to say I don't like watch listing them, because I think when the stock gets ready, it's going to be great. But right now, just on the daily chart, we're currently in this downtrend. I kind of draw the downtrend line. What I'm going to do here is I'm just going to go ahead and put an alert on that line. No, it's not going to let me. Um, it's but basically what we have is we have this downtrend. Now, will it reverse above the 21-day line? That's the real test. Is, I think, right about here you know at this line, at the 50-day line. If you can move above this 50-day line, then I think we're good to go. But right now, it's just so frustrating. I think you got to watch this one and maybe set a buy stop limit order. This would be a really aggressive entry if you were to come in here at about at about this price, at about 65. That's going to be a very aggressive entry. But what I would consider doing is possibly doing a buy stop limit order, and I'm going to take a look at at that line about 52.50, 62.50. So what I would recommend for DraftKings, and I do think it's definitely a buyable, would be to a buy stop limit order for 62.50 plus 10 cents, or 62.60. So that's where I'd be looking to possibly do a buy stop limit order for DraftKings. I want to see it move above this. I want to see it move above this 50-day line before I'm buying it. But it's a good, it's got a relative strength of 85. The checklist is a little bit weak, 55%. I'd like to see this better, but I think that's coming. And it's off of its high a little bit, but I think as it moves up, that's when to buy it. So I'm not surprised that there was a upgrade to 70 on this stock. Because it has been performing very, very well. It never came down to the 200-day line, which a lot of stocks did. So I think it's quite strong. Another cautionary tale is that I would be careful buying it before earnings. Now, the only way I would buy this would be with an option before the earnings, and you might want to do an option spread on that. I may look at that one, but earnings are in 4 days, and I think as long as they don't totally miss their earnings, they ought to do fine. They have in the past they've had increasing profitability. So this is looking good. If they can get increasing sales here, if they can be up 100%, then I think you're going to see it pop. But currently, 666 funds are in it. 40% funds are in it. This isn't really in a sweet spot. Still has a negative cash flow, but that's common for growth stocks. So that's how I would play it. 62.50 plus 10 cents. 62.60. That's where I'd set my buy stop limit order for this one, and I do think it's possibly worth getting into, because I think it could run very easily up to 70, no problems. I think it could run very, very easy up to 7. Thanks so much, Jeet. Always appreciate always love your comments. You're really so good. All right, so let's look at Tesla. Tesla, unfortunately, is still a lot of overhead supply. I really love the stock. I was in it, as you know, heavily last year, and it's just tough to deal with right now, because it's got so much of this overhead supply. Right now, let's switch to the daily chart to kind of give you an idea of sort of how it's trading. But here's the issue with it. I had this reversal line. I actually made a stab into here, but once it seems like it's range bound right now between about 780, and then on the low side, right at about I would say about 650 or so. It just seems to be kind of trapped in this range. So I think that you possibly could buy it if there's a reversal, which it does look like there's going to be, but it's not going. It's right now. It's probably not going to move any higher than about 780. And part of the reason for this is something that I've talked about before. There's a lot of overhead supply. That's all of the people that bought above this level, this 780 level, that are still there. They haven't really sold, so that every time it gets kind of close to kind of where they want to cut their losses, there's selling pressure. So this kind of keeps a cap on the on Tesla. Now I do think they had excellent earnings, and I do think that once they get the Gigafactory going in Austin and in Berlin, I think it's going to be stellar. But you've got to understand that it's probably going to take a little bit more time for Tesla to work through this overhead supply. And I think once that happens, then then we're good to go. That's really what a base pattern is that it'll pop up to this, it'll have this overhead supply, and then it has to work through that supply, and that's why sometimes you have a cup with handle, a double bottom, that kind of thing. This is sort of forming a sort of cup with handle, not really, but sort of a cup with handle. So I think for right now, long story short, I think you just have to watch this Tesla right now. I just don't think it's a good place to buy it. I wish I could see differently. I really like the stock, and of course, I just don't think you can right now. So that's unfortunate, but but don't give up on Tesla. I'm not saying give up on Tesla. I'm just saying right now I don't think it's a time to buy it because I want to see it reverse higher. But currently, after hours, we just went after hours. It's trading at 684, so it's right in that range. I believe that it's down a little bit. I believe that it's going to bottom right about 650. And then hopefully it's going to reverse higher. But right now, I think you got to be very careful buying Tesla because of the overhead supply. All right, let's look at SLB. SLB, bring that one up on the screen. There we go. Schlumberger. Schlumberger, really interesting company. This is one of the two large oil service companies. Of course, the other one's Halliburton. There's other ones in the business, but these two they sort of dominate. Schlumberger is probably the best of the breed. And it looks like it's in a consolidation, and it looks like it's moving higher, which is good. I like this. I like this group. It's 37 out of 179. I'm sorry, 197. I like this group very much, and the relative strength is getting better, and it's way above the 200-day line. So everything is kind of lining up with Schlumberger, looking very good. Still has a little bit of a weak checklist at 55%. I would like to see a relative strength of above 80, but we're so close at 77 that I think that that possibly could be overlooked for early entry. If we're looking kind of at the reversal, this is how I see it. I see that as it moves and strengthens above the 50-day line, I think that you could possibly get in. Now it's pretty aggressive to get in here because the correct the correct buy point is 30.41, but I like the stock overall. Here's what I do. I want to see it move sort of above this little consolidation level here. So let me just give an idea of sort of what that price is. Above about 28.50, I think it's buyable. I really do. I think that if you're aggressive, for the aggressive buyer, it is buyable above about this this 28.50 range, which I think for the aggressive buyer, 28.50 and above is possibly viable. So that's kind of the thing you have to think. You kind of have to think on, how aggressive do I want to be? But I think for the aggressive buyer, if you move above about 28.50 on this level, then you could possibly buy it. You want to move it. It is reversed, but you want to buy it as it's moving higher. So there was a little bit of a disappointment in terms of the earnings per share. They were down 16%. So this is why I say for the aggressive buyer. We've had sales that's fallen off a little bit, and profits has fallen off. But I do suspect that once, with the price of oil going up, the demand for Schlumberger services probably will increase as well. And I do think that they're going to probably come into a better profitability that they've been in for a while. So very good company. Like the area a lot. I just think you have to be a little bit careful based on the chart pattern. And I would buy it, potentially look at buying it. I wouldn't buy it necessarily. I'm probably not going to be a buyer at this level. 28.50 would be the absolute, bleeding edge of where I would consider buying it. So good question. Let's see if thanks, Cheat. Let me see if I can take another question. Thanks. Boeing. Okay, let's look at Boeing. BA, of course, is a symbol there. And, for years, this is, of course, a Dow component. Boeing was the largest exporter. Unfortunately, it's just, again, it's sort of like Lucy and the football, I think, with this one. Great company, but when it comes down to execution, sometimes they just don't have it going on. I mean, I don't know if you saw the space launch, the reentry that SpaceX did, just stellar, by the way. Blue Origin and Boeing have both gone to court to basically throw some marbles out in front of Elon Musk's SpaceX because they're doing so good. So they're not executing. I mean, this company should have been the one that won the contract and for the space for the crew capsule. They didn't. They're not executing on the Max. There's a lot of issues going on right now with Boeing, and I like to be more positive on Boeing, but I'm currently not. Right now, they did go through the first quarter. It was their sales were down, no surprise, because all the orders were canceled. They did have also a loss of $18.83 a share. So I just right now I'm looking at the chart and I'm like, yeah, I don't know. I think that I'm sort of a doubting Thomas on this one. I just think until it reverses, I'm not gonna be as interested in it. So I'm gonna set a line, a reversal line. This would be. I definitely wouldn't buy this below where it is now, but it's below the 50-day line. I think it needs to reverse higher. There is a 244.08 buy point on it, and currently it's 235.23. But I still want to see this thing get a little more strength. Maybe it'll strengthen up, and it does look like a cup with handle formation, so it could be very good. But right now, I think I just want to see it. I want to see it move up to a proper buy point. Currently, its relative strength is 75. I prefer that it were 80 or better. Checklist is weak at 44%. I just think you got to be, watch listing this one right now. It's a great company, but I don't think it's the right time to buy it. I just don't. Let it reverse higher. Let it move through the buy point, and let it move through the buy point. Great question. Thanks, Jeff. By the way, full disclosure. Full disclosure. I went to school actually with the president, the now president of GE. So hopefully he can turn it around. He definitely did a good job at. Definitely did a fantastic job at Danaher. So very interesting. Very interesting. So let's take a look at GE, and I so much want to buy this stock. And it does look, like it's starting to get into a buy range. I mean, it's been hurt so long that, what else can you do to it? There's a consolidation. There's the actual true buy point is 1441. And it does look like it's trading above the 21-day line, and it looks like the 10-day line is moving up as well. So could we get in this? Well, the relative strength is starting to look good at 86. I mean, this one could be a surprise. I mean, they've whittled down a lot of their debt. They have a good checklist. I wish the sector was better. It's 133 out of 197. That's not particularly good, but they're at everything. So I do like the stock. We have 1871 funds in it, and we do have the Fidelity Contra Fund, and that sort of is the good housekeeping seal of approval. So I really do think you could probably start, potentially if it moves above about 14. That's really kind of what I want to see. I think you could start nibbling on this one. Absolutely, I think you could start nibbling on this. So we got 38% funds in it here, and this is a truly great company. Now we still have some issues. We still have some issues. We are making profit, which is good, because remember this is a Dow stock, it's not a growth stock. Um, you know, this is we want to look at things like the return on the equity. The return on the equity on this is stellar, at 26%. So if you are a dividend player, and I'm not so much of a dividend player, but with a stock like this, I may be one. Um, this is the kind of thing you want to look at. It's 28% return on equity currently, so that's very strong. You've got sales up just slightly, 2%. The profits are down though, and this is an issue. I mean, they're still going on this restructuring, and that's not going to end for a while. So, could you start making buys on this one? Well, there is a cup base, and the pivot is 21.21. We're at 22.17. I say you probably could on the weekly chart, and you don't really want to look at the daily chart on this. You could probably start making some buys here. It does look like, I mean, the chart is looking good, and but you got to be careful. I mean, I was buying Ford, I got shaken out of that, but this one, oops, that's great television. I want to put GE in here. I've talked a lot about this chart, and I may have checked the wrong chart. There we go. Yeah, there we go. We're back on it. Yeah, it's in this consolidation, and it looks like it is going higher, but we're still kind of low. So I would be looking at this possibly above about 14. I just kind of want to look at the profits. Yeah, we're down, of course. Our sales are down, and we still have good cash flow, and then the return of equity is not so good. But yeah, so basically, yeah, I would consider it. I would definitely consider it, but only if it goes above 14. So that's kind of my thing, and I probably would not be more than a nibble on the position there. All right. Zoom. Oh, Zoom earnings play. Very good. Let's look at Zoom. Zoom is probably one that I probably will have a bear call spread on. Thank you for bringing this up. Oh yeah. Okay. Are we when are earnings? Let's see when earnings are. 6-2. Okay, they've come through earnings. Okay. It came through earnings. Look at this. Very nice sales. It came through earnings. Boy, you know what? I don't know if, but as you can see, the trend is downwards on the chart, and the relative strength line is pointing down. If I put this spread together, yeah. See, our next earnings are in June. I'm probably not going to do anything with this until June. It's been trending lower, but a lot of that's been built in. I do think that the long-term trend on this is probably lower, at least for now, because it got so ahead of itself. So I just don't. That's probably how I'd be playing it. Anyways, let's look at this. NEO is the best side of the market, is about to bounce back and rally like crazy for another 2 to 3 months. Yeah, you might be absolutely right. I mean, the thing about NEO is, when NEO turns, I agree. When NEO turns, there's going to be a lot of hot money. Absolutely. My only concern with NEO right now is that NEO is pulling back, and I don't like to buy. I like to be a trend trader, and I like to jump into the stock as it's moving higher. I don't really like to buy in a downward trend. Now, there's some people that do this, and they're successful at it, but I just like to limit my risk more and buy an uptrend. That's my main thing. And looking back on it, I thought we almost had a reversal on it, but we're still under the 50-day line. So hopefully we'll see it turn. If it turns, then I think you're right. I mean, I think it could move much higher. Now, there is a real problem though. Even if we do have a lot of power, is that the stock has a lot of overhead supply. What I mean by that is that there's a lot of people who bought the stock basically at the proper buy point right here. Okay, yeah, there we go. It's not. I'm not quite right. They bought it right here, but they didn't sell it. And then when it declined, they didn't sell it. And then the decline didn't sell it. So as it comes up, it's going to have to get rid of some of the supply here and here in order to do that. So what happens a lot of times on these really hot stocks is that people don't set stop losses. So they ride the stock up. They buy the stock, they ride it up, and then it comes down, and they don't sell it, and they keep it. And then eventually they look for a chance to buy it, to sell it, to sell it. Unfortunately, that's the case here. So I think, basically we have an issue right at about the $45 level. Anytime it gets up to about $45, it seems like it's seeing some resistance. Actually, a little bit less than about, between 40. So it's moving up there, and then the people that bought here and didn't sell, they're selling out. So I think you got to be a little bit careful with NEO for right now, anyways. For right now. Anonymous student. Should we buy Rocket before earnings? Well, Rocket Mortgage. I don't know. There's probably a better bet than Rocket Mortgage. I don't think so. This has had a blow off top, and I you might do well on this one. You might do well on this one, but my guess is I probably won't be. If you buy this one, I'm not going to probably be there with you. I don't think this is a good chart, and because it's a downward trending chart. So you can see we had a blow off top, and then so the trend is sort of downwards, even if we do that. So I probably am not a buyer on this one, but there is another company, if you're interested in the mortgage servicing area, that you might want to look at. It's called Mr. Cooper, COUP. And this one has done terrific. Well, not Coupa software, no. Coop. No, it's not Coupa software. I'm sorry. COOP. There we go. Coop. Yeah, Mr. Cooper. Mr. Cooper. I had it confused with Coupa software. This is Mr. Cooper, and this one has done very, very well. As you can see, it on the weekly chart, it just keeps going up. Isn't that amazing? Okay. 93% relative strength, tremendously good numbers. Just came through earnings. The earnings were up 422%. So if you want to be in the mortgage and the mortgage servicing area, I think maybe the one you want is Coop, COOP, and not Rocket, because I think it's just a better stock overall. It just has better numbers. It has a better checklist. It has better ownership. It's got 456 funds in it. The industry is 21 out of 197, so that's really good. So I think on a long-term hold, I think instead of Rocket Mortgage, I know Rocket Mortgage has great ads and everything like that, but if you look at the charts, I think that Coop, COOP, not COUP, COOP, that's your best bet. I think that's going to be a better one for you there. All right. Would you please remind us the book that you recommend? Okay, thank you very much, Peter. So appreciate it. The book that really helps me, and of course, there's a lot of books out there, that are great. I mean, that are great, and you can get this by going to the website, www.Dallas Trading Floor, or if you're watching at home on TikTok, you can just go to the beacons. I mean, it's my profile. Hit the beacons, and it'll bring it up. But the name of the book, and let me bring this up, is How to Make Money in Stocks: A Winning System, Good Times or Bad. So let me kind of show you where it is on the website, Dallas Trading Floor. So you can easily get this. Oh, there we go. And hopefully, I'm going to be renovating. But anyways, you go to what they call the Learn to Trade bookshelf, and hopefully it will. Okay, there we go. Okay, so here we go. Here is the Dallas Trading Floor, screen here, so you can see it. Basically, the book that you probably want to get, and this is you basically can go to the website. I really appreciate it if you buy it off my website, because it's on the Learn to Trade book, because it gives me a little bit of money, so I appreciate that. It's How to Make Money in Stocks: A Winning System, Good Times or Bad by William O'Neill. and basically it's available in Kindle. And I just think that this is one of the best books that you could ever see in terms of how to trade stocks. And so, if you're interested in this one, just go to the Learn to Trade bookshelf. Click on that, and then it's gonna you can click over on this first one. I have a cookies issue. That's why it's not showing this symbol, but you can see this: how to make money in stocks, a winning system, good times, bad. So that is a very good, that's a very good book to get, and I highly recommend reading it because it really outlines the canceling method, and this is what changed my investing career, and hopefully it can help you too. So it's a great resource, and you should you should definitely take a look at it. You should definitely take a look at this one. Very good book to read on that system. All right. Well, thank you. Chuck's on thoughts on CHGG. Let's look at CHGG. CHGG. And let's see. What was that? All right. Chegg. And basically, we still have this is an interesting one because of the digital textbooks. I think this is a fantastic idea. I remember when I was going to school, and I actually in the Bay Area when I was going to graduate school, I remember it was so expensive to get textbooks that I was poor at that time, and I basically went to the library and I read them in the library because I couldn't afford to buy them. Can you believe that? But I think that this is definitely looking good in terms. This is a really good concept, I think. Now, here's the thing: would I buy it? Well, I want to see it reverse because the stock is trading below the 200-day line, just barely, but I still don't like to buy them when they're doing that. Now, hopefully, we'll see a reversal off of that line, but currently, right now, this is the line that I'm going to set, and I'm going to set the alert on. I want to see it trade above this level, so it's got to be up here, basically above about 95 before I'd be interested. But I definitely would watch this as one. This was a very strong sell signal, though. We've got a large amount of selling and a large gap down. So, and the relative strength. So, right now, I just don't think you can buy it based on this chart. Now, if it reverses and moves higher, then I think you possibly can. But right now, I think you got to be careful with Chegg because it doesn't look good. The chart doesn't look good. All right. MNRL. Let's look at MNRL real quick. And you're definitely looking in the right section of the supermarket here. That's for sure. The mineral stocks have been doing fantastic. As a matter of fact, the U.S. The U.S. oil and gas U.S. exploration is basically number 2 out of 197. So you're definitely looking in the right place. Bingham Minerals. Let's kind of look. I kind of want to get an idea of this general group in general. This is a commodity-based stock, so it's a little bit different play than you're going to have on some of the other ones. But let's kind of look to see. It's got the checklist is a little bit low, but it looks like a good chart though. The ownership, good. It does have stable fund ownership. I like that, and we're looking pretty good. Now, how can we judge this? Well, I do like this one thing. We have this relative strength line, and it is moving up. So that's very good. It's almost at its top. By the way, what I'm looking at here, this is actually not a price line. This is the S&P 500. This is the stock relative to the S&P 500. As you can see, it's above the S&P 500. So it's trading above that, and it looks as if it's moving above as the relative strength is moving up. So that's a very strong signal. Now there's a number of stocks in this space that I think have a little bit better numbers. My personal favorite is Denbury Resources, DEN. which I think has had a very good run. This is the chart for Denbury here. It's almost, it's about the same price, but it has a higher relative strength at 97, a little bit better relative strength line, and I think overall it's good. Now the problem with Denbury Resources is that it's got earnings in 3 days, and you don't want to hold this through earnings. You really don't, because there could be some problem there. But this is the one I kind of want to watch this as opposed to your other uh, as your other one. So this is the one I would kind of maybe take a look at replacing for your other stocks, Denbury Resources. So that can be a very good stock. All right, so let's see if we can get. Let me see if I can get a question from TikTok. I've been lollygagging around here. Okay. Oh, can you check PayPal? Let's check PayPal. PayPal's going to be coming through earnings, and I think it's going to have a very strong report. Now, here's the thing: I'm not going to take it through earnings. I want to see how it reverses, because right now, PayPal has a cup with handle pattern, which is the best pattern, but it's pulling back. So I want to be careful about this one. There is a potential, if it has a good earnings report, that would be the line that I would want to consider buying it if it moved above that. So I'm going to set an alert on that line. And basically, what that does is that if it's got a very nice base pattern, it's got this cup, and then hopefully it's going to pull above the 277.86 level. If it does, and it's a little bit slipping down, that would be a very aggressive buy, but I think it's a good buy. I really like this stock. I've liked the stock for a long time. It has a great checklist, 77%. And by the way, this is the stock that has a lot of support for Bitcoin too as well. They're gonna be able to transact with that. So very interesting. The sector is not as good as I'd like. It's 115 out of 197, but still excellent. There's just a ton of big funds in this. 4119. I think possibly for 2000, and if there's any stock that I think has the potential of being sort of a safe haven for for investments, this is the one that I see as being one of the very, very best. I have been in and out of this stock for a long time. If you look at the monthly chart, it's nothing but up. It's nothing but air, right? It's nothing but, it's just up. So in a long-term portfolio, I definitely would, having some PayPal is not a bad idea in a long-term portfolio. This is a strong, strong company, and I think it's only getting better. All right. All right. Well, I have almost run out of time here. Thoughts on Dogecoin? Yeah. GTHX. Let's look at this one. Thank you. GTHX. Let's look at GTHX. GTHX. All right. Boy, I can't really tell you about this one. This is G1 Therapeutics. I don't know this company. Let's kind of look at how it. Okay, let's. I just kind of want to get a feel for this one. It's got a 55 checklist, not the greatest. Ownership, well, it's got some fun sponsorship. I like that. Yeah, the rank of the industry isn't very good. 124 out of 197. Not really that liking all that much. I just I think there are other better sectors to be in right now than this one. I think you got to go for the more top performing sectors. And sort of the last thing I'm going to do today is just kind of let's kind of look to see what sectors, let's see where the money is flowing in this market, because there definitely has been some rotation out of some of the big cap techs, and I want to kind of look at some of these industry groups to see kind of where where the ranks are. So I'm gonna go ahead and do that right now. Obviously, one of the areas that is continuing to do well is the Oil and Gas Royalty Trust, and of course the largest in that, the largest stock in that is TPL, Texas Pacific Land. The oil and gas dominate the top three. Then there's the shipping, and by the way, ZIM Another stock that's doing very, very well. But there's also this retail consumer electronics. There's only 4 in this range, but I kind of want to look at this. I kind of want to look at this particular area. This is the retail consumer electronics. It's trending very, very well, and I kind of want to look at the top stocks in here. And this is a bizarre one because of course we've got GameStop. Everyone's heard of that, but the one you probably want to look at is this one called Cons. And for some reason, I don't know why. I'm never. Well, I think it's their layaway print. They've got a layaway thing, but this one, it's not a very expensive stock. It's based. I think it's based here in Dallas. I'm not sure, but it's sort of rent to own kind of place. And this one might be. You might want to put this on your radar. It's symbol CONN, and uh, the there's another one in this group that I really like called Rent-A-Center, RAC. And I did really, really well on this one. I probably shouldn't have sold it when I did. I had this one last year, and let's see if Rent-A-Center comes up. All right, is it Rent-A-Center? Nah, not coming up. Anyways, Cons, CONN. It's kind of like Best Buy. I don't know if everyone has seen this, but it's got a relative strength of 93, and it just seems to be doing great. And I can't figure out why it is, but it's got a nice checklist. It's in a top group, and there's a lot of funds that own this, so it's weird because it's a retail stock. Normally I don't do retail that much, but they just had some blowout numbers. I guess people like the big screens. I guess I don't know. Even though their sales were down, their profits were up. I think this is because it's sort of a rent to own place, and they have a lot of stuff, and also J.C. Penney's and other ones, they've reduced the number of stores, so this seems to be doing very, very well. So just kind of wanted to go through that. All right. Well, thank you very, very much. Thanks for everybody stopping by. Super appreciate it. And if you're interested in getting more information, it's really easy to do. I have this. I have it's called Action Trade Alerts, and basically it's available by going to www. Dallas Trading Floor. Now, if you'd like to take a look at a trade that I have today on Beyond Meat. And this is, by the way, we normally do these. We do this all the time for our people in our Discord room, our special Discord room. But for other people, I just want to kind of give you an idea of what it's on. This is trading very well. You can go to this address, www.veni.com/u/Dallas Trading Floor. Take a look at that one, see if you like it. And if you do, then just sign up for those action trade alerts by going to www.Dallas Trading Floor. Well, until tomorrow at 2:30, happy trading. Thanks for everybody, and stay safe. And I will be back tomorrow at 2:30, and I hope everyone is doing well. And so happy trading.